Hey guys, welcome back to another video. And in today's video, we're going to discuss about how can you differentiate between a strong area of demand or supply or a weak area of demand and supply, and how you should be looking for a position only from the stronger areas. And the second part we're going to discuss about is going to be on how do you trade the areas of demand in two ways. So before that, I'm going to explain my strategy in brief so that you know what we're actually talking about. So our strategy is simple. It just has 4 steps. One is market structure. Then we have premium versus discount. Then we have supply and demand, and we have our internal structure. That's it. Now, if you don't understand this, I've uploaded another video previously which goes through all of the steps in details. I would recommend you to watch that. Yeah, let's talk about how to differentiate between a strong area of demand and a weak area of demand. So we generally call this a breakout structure, right? And we're looking for longs from the discount area. So this is going to be my area of discount, and I'm going to look for longs from here. But the thing is, okay, I'll do one thing. I'll draw a minor. I'm going to replicate this, but just on lower time frame. And this, okay? Just note what I'm going to do now. So now, according to you, yeah, the breakout structure line. According to you, which area of demand is stronger? One is going to be this, which is, see this part, which is going to be like this, for this area of demand and for longs. One, or something like this, which is happening over here, where price is giving a breakout structure, liquidating the low and creating another area of demand and going up higher. So the thing is, this area of demand is a stronger area of demand. You know why? Because this is sweeping some liquidity. This area of demand is sweeping liquidity. So we consider this as a strong area of demand, and this is valid for your buys. Same thing with an area of supply. Now, which is a stronger area of supply? This area of supply is stronger, or you get a breakout structure, or this area of supply is stronger? What do you think? Again, this is stronger. Why? Because it's just sweeping some kind of liquidity. So only when an area of supply or demand sweeps liquidity, we consider it as a strong area of supply. So correct. So here your actual buying should happen from this area of demand, because you are looking for long, because you have a bullish breakout structure. So I hope you understand that, and I'm going to show you an example on this Solana trade I'm in right now. Again, this strategy works on perps, forex, anything. So just understand the logic behind why you're doing something. Then once you understand that, you can execute this anywhere. So I generally trade forex, but I saw the setup on Solana, so I took it, and you can see it's doing great. So here we had a 4-hour breakout structure. We traced into the premium. Now here you have two areas of supplies. One could have been this area of supply, but this is invalidated because this is below the premium versus discount. We do not want to look for areas of supply below the premium versus discount. Now this for us is an area of discount, so we want to look for longs to the area of premium. So this is the only area of supply we had. And why was this a strong area of supply? We swept liquidity and we formed this area of supply. This is why this area of supply is strong, and I was happy to look for longs when this area of supply was tapped and we got the confirmation. Then all again, plus point was we had liquidity to target. I hope you understand that. And okay, so this was the first part where I explained you how to differentiate between a strong area of supply, a weak area, a strong area of supply, and a strong area of demand. Now, there will also be many scenarios where you won't have market structure like this, where let's say price broke structure. So this is the break of structure. It never retraced to the 50% and it just goes up higher. This happens when the bullish order flow is very strong. The buyers are in complete control. and the retracements aren't happening fully till the area of 50%. So this is a scenario which happens that time. So how do you trade these scenarios? Same thing. Now here again, our ideal scenario is we want market structure, we want premium versus discount, we want areas of supply and demand, and we want our internal structure. But what when we don't have market structure? Then how can we use areas of demand and supplies to how can we use the areas of demand and supply as market structure? So here, let's say this is the market structure. Okay, so now this is a strong area of demand. Why is that? We had a break of structure, price swept the low, and then it created another, it created the structure again. So this is my strong area of demand. We just discussed that. How can we use this area of demand as our structure? So I'll just draw it properly. Area of this is not the area of demand. Price comes, price sweeps this low, goes up and comes down again. So now I'm going to dissect it and I'm telling you what's actually happening. Break of structure. Everybody is looking for longs here. What does price do? Price breaks this. So now people think they have got a change of character. And now people start looking from shorts from this area, from areas of supply in this line. But again, what happens again? You get another change of character. So now again, you could complicate this, or you could just call this liquidity. Where you're telling that price broke structure, price liquidated this low and created another high. So now from now on, this is my strong area of demand. Right? So now I'm going to tell that this is my strong area of demand. And this is going to be my and now this is going to be my strong low. That I'm waiting what is happening. It's going to be my strong low. And this is going to be my weak high. So now I'm waiting for confirmations to trade from here to this high. So same thing, what we did on the higher time frame, we'll do it on the lower time frame. Now we're considering this as a market structure. Ignore what happened before. Now this is my strong area of demand. I have my strong high, strong low. Same thing again. Draw the 50%. Price comes into area of discount. Wait for information, wait for the internal structure shift. Enter on long, target this high. Simple. So again, I told you two ways of how you can trade it. One, when you have an overall market structure, price is retracing to an area of discount, and then from there you match it to the internal structure and trade it up higher. Or when you don't have market structure, how you can use strong areas of demand as market structure and trade it accordingly. I showed you one example before of my Solana trade, which was with market structure. Now I'll show you an example where I used area of demand as market structure. This is my Euro USD trade. I still haven't got on this trade, but again, it is valid to me. And I also took a loss on last Wednesday on this one. So again, I'm telling you, this strategy is not a holy grail. This has wins, this has losses. But what I'm saying is if you can execute on this for a long amount of time, you will be profitable. So again, I'll do a top-down analysis so you understand the complete flow, what is happening. We had a daily break of structure, came down, we have a change of character. This is just my daily structure. I'm just trying to, get an hang on what is happening on the daily time frame. I'm not trying to look for trades with the structure. I'm just trying to know that, okay, I might want to look for shorts because we are daily bearish. That's it, nothing more than that. Then I see that we have a strong area of supply. Now again, why is that? We came, broke this low, swept, went higher, swept this high, and again continued down lower. This is my strong area of supply. I want to look for shorts, but will I just look for shorts because we are in a strong area of supply? No, I need a lot of confirmations. And in the last video, I also discussed on how we use internal structure to take our confirmations. Here, if you notice, we had a bullish break of structure. This is now, again, this is my external structure is bearish, but so right now we're in a retracement phase. This was my extension. Now this was my impulsive move. This is my retracement. So if you see, this is my retracement phase now. Again, after the change of structure, I will look for shorts, but it's not ready for shorts. That is what my structure is telling me. Because again, what do you see here? We had a break of structure above, liquidated this low, went up higher. So this is my strong area of demand. I want to look for longs, but is this area of demand mitigated? Has the price come and gone up? No, this means that there are still buyers who are willing to push the price up higher. But unless this area is not mitigated, goes up, and then I get confirmations, I will not be looking for shorts. And this is something which you have to give it time. Again, now I see that this is my area of structure. This is my complete range where I want to look for longs. Now, if you see, if I draw my 50%, my area of discount comes here. So again, if I want to follow my textbook, the textbook guide completely, yeah, then I should actually wait for the price to come here, wait for the shift and look for longs. But again, that was the first step. What was the other way of trading it? Using strong areas of demand of market structure. What do you see here? We had price breaking this high. Okay, no, here, price breaking this high, came out, liquidated this low, and gave me another structure. So now this is my strong area of demand. And what is this? This is my strong low. This is my weak high. I want to trade it to the weak high. I will not wait for it to come and retrace here. Again, you could, but you will be reducing your trade frequency by a lot. If you're okay with that, just follow that. But this is another way of trading it, which I'm explaining you right now. Or same thing. Now ignore what happened before. This is my unmitigated area. Forget about that right now. Right now, this is valid because we had a strong area. This is my strong low. This is my weak high. Same thing. I'll draw my 50%. Now I'll wait for the structure. Now I told you the way I classify my internal structure is really different. It is basically when I draw my 50% from my strong low to the weak high, I draw my 50% only when the price retraces to the 50%, pulls back. And this pullback must be at the 50% of this entire leg. Right now, if you see, it comes to the 50% and it goes down. Same thing again. Goes down, goes up. Does this come to the 50% of this zone? It does. Because I have checked it before. See, comes to the 50% and then it goes down lower. The ideal scenario should be you should wait for the shift. I did not wait for it because I actually do not wait for the complete shift because as soon as I see that the price is coming, from the third leg, as soon as price retraces from the top area of supply, I'm happy looking for long. Well, this was a very valid setup. Now here, Trump rejected Iran steel, which is why price started tanking down. And we also had FOMC, which was another reason for that price went. It swept this line, it went up higher again. And now we've got the breakout structure. And now price is retracing back into the area of demand. So now this is valid for me. This was also valid. This is also valid. You can trade it however you want. You can either wait for the third leg where price rejects the top area of supply and you can enter on the retracement, hoping that this is just an inducement for the sellers and price is going to break it and go up higher. Or you can wait for the complete shift and you can enter on that. Completely up to you. Yeah, so this is another way of trading it. I explained you the other way right now. One was in Solana, where you have complete market structure, have a strong area of demand, you wait for the shift, and then you trade it up to the weak high. Or else, the same structure, but price doesn't retrace and price continues up higher. How can you trade? By having strong areas of demand and then trading it using the same strategy, 50% internal structure and trading up higher accordingly. This is the same thing for shorts. And I hope you understand it because if you understand for longs, short shouldn't be very hard to understand. I'll explain it by inverting the chart. Same thing. A strong area of supply, waiting, enter, exact same thing. Just follow this, nothing else. And one more thing which I didn't tell you. Okay, you can tell that if this is my weak low, why am I not targeting this? So what I have backtested and I've noticed that most of the times price actually goes to 786. This is the fib level 786. It rejects and comes down. This is when you see this double, some people call this double top pattern as well. So this is how this happens. And this is, a very, it's something which happens very frequently. So I generally prefer taking it to 786. You could target this size, but you will lose on some win rate. You will see most of the times price goes up and it tanks down from here. Now I have a very good example of this, but before going to the example, I just want to tell that the video is done here. I have explained you both the ways of how you can trade it. One using the complete market structure, one when the market structure is not there and you use areas of demand as market structure. Now for the example, I'll show you one of the trading upon CAD CHF. So ideally, I have given a breakdown of this previously, but I'll give it to you again. My daily was bearish, but I had open liquidity. So what was my objective on this trade? I want to trade the price towards liquidity point. I had my 4-hour structure. I had 50% here. I had my areas of demand. I waited for the internal shift, and I'll show you how the shift happened again. 50% is here. I draw 50% from here to here. Price comes to 50%, goes down. 50% comes down, gave me the shift. I entered on the shift, targeting up higher. But if you see what happened, price never went to this high. It might go on later, but again, I do not want to be in this retracement phase. Because sometimes, you never know what's going to happen next. It might go up or it might not. But what one thing you notice is it correctly goes to my 786, which is where I exited. 786, I exited at 786. Price didn't take the high out. It's going down lower now. So this is one of the reasons I target the 786. And yeah, that was just a quick tip. And I hope you understood. If you understood, like, and yeah, I'll see you in the next one.